Hi everyone, today in this video we are going to learn about the bank reconciliation statement. Now what is this bank reconciliation statement? Bank reconciliation statement is a valuable tool to identify differences between the balance as per the internal bank book which is maintained in the organization and the bank statement which is received from the bank. Bank reconciliation also helps in detecting some frauds and manipulation. It is a good practice to carry out this exercise at a regular intervals, which helps in maintaining controls in the organization. This also keeps the bank book up to date, as those transactions which are rightly recorded in the bank statement can be recorded in the internal bank book. So this is the bank reconciliation explanation. Now in FocusERP, I will show you how to work on the bank reconciliation statement. Let me log in with my credentials. Once you are logged in this company I don't have any transactions. Let me show you first. Okay, these are the data statistics which is showing 0. Okay, here what I will do is to work on the bank reconciliation statement, what I will do is I am going to enter some bank balance through an opening balances. So search for the opening balances, click on new. Here the date will be your 31st March 2022 because I am taking the closing balance of that particular date into the bank account. So let me choose the bank account here. I have ICICI Bank with the account number so and so. So I have say around 26,000 balance in my account. Okay, let me just put you one more entry how this 26,000 I got in my account. I am just putting as a share capital that Chakri has invested this money from his account. Let me save this. Okay, once this is saved, let me go and see what is my ledger statement of the bank, or I can go to my bank book. To go into the bank book, click on financials, reports, cash and bank books, go to the bank book. Here the date range I have given here, start date and end date. Account I can select the required bank and click on OK. Now you see here I am getting the opening balance of 26,000 in my ICICI account. Now from here how the transactions will get flowed into the bank account. Mostly in the bank account we maintain the receipts and payments. Now what are those receipts? You have already seen my previous demos sales module from order to receipt. So whatever the amount received from the customer, we are going to put it in the bank account if it is received through a check receipt. Okay, some customers may pay cash amount which is not considered in bank. Some customer will pay a check amount. Okay, so whatever amounts paid by the customer through a check amount, those are deposited in the bank. Say I have sold some goods to a customer. Now customer has paid me checks in 2 checks. So let me enter the receipt first. I'll just go to the financials, transactions, cash and bank, and I'll go to the receipt. In the receipt I am going to enter the receipt number, check date, bank name, check number and what is the amount received from my customer. Okay, click on new. Here I will select in which bank I am going to deposit this check. Okay, I can just maintain the check number here. I'll just select my customer name. From this customer I have received 5,000. Okay, I'll just adjust these bills as a new reference. I can take it as an advance also. I'm going to save this. Again I have received one more payment from my customer. Say from customer B I have received, okay, with a different check number. Say I have received 2,500. Okay, let me show you the bank account now. I'll just go to the bank book, select my ICICI account and click on OK. Now you see I have received 5,000 and 2,500 plus I have some balance in my account 26,000. Altogether it is 33,500. These checks I have already deposited in the bank. Okay, same like we received from customer, sometimes we pay to suppliers also. Okay, say I bought some goods from one supplier called vendor A. Now I have to pay the money. Okay, let me show you how to do that. Go to financials, transactions, cash and bank, payments. Click on payments, click on new. Select the same bank in case if you are issuing the check to vendor from the same account, and you can give your check number here and you can give your vendor name to which vendor you are paying. Say I am paying 1,500 to my vendor. I'll just save this. Now let me show you the bank book again, how the effect will seen here. Now you see this is the statement of your ICICI bank. Now you see here 26,000 is your opening. You have paid 1,500 to the vendor and received 5,000 and 2,000 from your customers. Now altogether your balance is showing 32,000. It is showing 32,000. It was 33,500. I have paid 1,500. Then it has become 32,000. In realistic scenario, the checks what you have issued or the checks which you have received, they might clear or they might not clear. Now this difference, how to see this difference, whichever is cleared and whichever is not cleared. Now what happens is you receive a statement from your bank on a weekly basis or monthly basis or on daily basis also. Now based on the physical statement what you have received from your bank, you need to cross check with your internal books, internal bank book which you maintain in the organization. Now here we have a bank reconciliation statement here. I'll just show you how you have to go to the bank reconciliation. Click on reports. Okay, here you have a bank reconciliation. In the cash and bank tab you have a bank reconciliation. Here we have a facility to import the reconciliation also. Okay, this I am going to show you. Click on bank reconciliation. Here in bank reconciliation, the first part you need to select which bank you are going to reconcile and what is the sorting order you need. Here you have three different sorting orders. how the report has to be shown. I'm just selecting document type, clearance date and check number. Now here I'm just selecting year to date or as on date. Here you have status, pending, cleared and all. I will just select all. Okay. Again, one more thing, if you want receipts and payment both, here the select debit and credit type you have to select as both. Okay. When you select this, here you have an option called load. When you click on load, now you see here in the bottom you have book balance, opening balance, debits, credits. Okay, here bank balance, it is showing 0 because all are marked as pending. Because after seeing the bank statement, here you have to mark whether this is cleared or not. Now how to mark that? Just click here. Okay, you can see here, when I click here, the status is getting changed in a toggle mode. Okay, whenever I click here, you see in the bank balance field here, this is the bank balance field. I click here. Now the difference is showing 26,000 minus. Now again I click here, the difference is showing 28,500 minus. Okay, now I am going to clear this also. Now you see here the difference is showing. Now the difference is showing 27,000. Okay, now you see the book balance, it is showing 32,000. Okay, this is our book balance. How the 32,000 is coming, I'll just explain you. 26,000 is my opening balance. Okay, plus 2,500, 28,500. Okay, 28,500. Then I have 5,000 again. Now if I remove this 1,500 as a credit amount, my book balance is showing 32,000 as a book balance. Now what is this difference? The difference is 27,000. Now why this 27,000 is showing as a difference? Now you see here I have 3 debits. Okay, the count also you can see here, debits count 3 and credit counts only 1. Okay, now I'll just, once this is done, okay, now you can go and check your statement. Okay, let me open and show you after clearing this whether the status is changing or it remains same. I'll just load. Now you see whatever I have cleared, it is showing as cleared. That means it is working fine. Now how to get this bank balance? You have a bank statement here. Go to the financials, reports, cash and bank. Here you have a bank reconciliation statement. Here you select your bank account. Okay, whatever the date range you have given, you can select as on date or a date range also. Now here you can select the considered date based on transaction date or clearance date. I will just select as a clearance date, and I will select as a include opening balance also. If you want to include your PDC also, you can include here. I'll just click OK. Now you see this here, balance as per books 32,000, balance as per bank. If you see in your organization books, your balance is showing 32,000 because there are 2 checks received from customer, 1 check you have paid to your supplier. As per your books, it is showing 32,000. And as per the bank books, because 1 check is not cleared, it is showing 22,000. Now this is the bank reconciliation statement difference what you get in the bank reconciliation. So this is how the auditors and the accountants will reconcile the bank statement. Now some accountants and finance controllers, what they do is they pass a journal entries to maintain these accounts. For that also you can do the control accounts. You can create two accounts, receipts control account, okay, under assets, payments control accounts under liabilities. So whatever checks you have received not clear, you can even do a journal entry there. Even the checks what you have issued which is not presented by your supplier in the bank, for that also you can pass a general entry. So to maintain these controls, some people will pass a general entries also. So in the realistic scenario, to maintain this bank balance and your internal book balance as same, you can pass those general entries. Okay, in the next session I am going to show you how to pass those entries also. It is a very simple entry. Okay, this is how we maintain the bank reconciliation statement. If you like my video, please like and subscribe. Thank you.